Now if you have to state of what the qualities of money are, like what can be treated as money. Can I tomorrow say, okay, I'm going to have this particular piece of paper and this is money for this entire town from today's date? Can I really dictate my terms? I cannot. Right? Why? Because I have to satisfy certain conditions before that can be termed as money. So first condition, if you can see, is it is generally acceptable. Very important, isn't it? Everybody should accept this as money. So I cannot just say this is money for me, and so you have to start adjusting and you have to take this as the exchange from tomorrow. So second is basically transferability. So can I actually transfer this amount or this particular thing as money to another person? If yes, then it can be acceptable as money. So general acceptability is important. It should be transferable. That is also important. Divisible. Like if you are talking of 1 lakh, is it divisible in smaller portions? If yes, then yes, it is good. It can be classified as money. Durability. So I cannot just say, okay, sugar is going to be money from tomorrow, but if it rains, it's gone. Correct? So durability is a very important thing for money. So plastic money, electronic money has become the next form because it is durable. You don't have any worries except for cyber attacks and such things. You don't have much worry of this particular money. Money should be cognizable, right? Cognizability is basically that it should have certain marks. Like if we have the currency notes of India, they have watermarks. They use a certain type of paper, right? Then they have certain silver lines which are marked inside and so on. So you have certain type of specific markings on that money, and that's why it can be distinguished from any other category. Then it should be portable. Portability is another important thing in terms of money. It should be easily taken from one place to the other, or transfer should happen from one place to another without any difficulty. Homogeneity means it should be the same. So 100 rupee note, 500 rupee note, so these are the different types. So if I take a 500 rupee note today from, let's say, Pune in Maharashtra, and I take another 500 rupee note from another city in India, let's say Ahmedabad. So the both of them are going to be same in looks, right? Except for the number on that note, everything will be the same thing. So money is having some homogeneous features, and that's why its valuation wise also it is same in both the states. You cannot say 500 rupees is more valuable in Mumbai than in Ahmedabad, right? So it is homogeneous in value, in looks, and so on. And finally, it should have stability. Today, if I have a 500 rupee note, I cannot say today it's 500, tomorrow it becomes 300, next day it becomes 200. No. Stability is important. So 500 rupee note is a 500 rupee note all the time till it is abolished or till there are some changes which happen on the basis of the entire country, right? So this is basically a very important feature, that there should be stability in terms of that money. So now coming to the functions of money. So based on our discussion, if I have to ask you, what do you think are the functions of money? What is the primary function of money? Come on, you can guess. Tell me. Okay, first thing I can help you out. First thing for money would be the primary function is it serves as a medium of exchange, right? And second is it is having a measure of value. So two important things, primary functions that money has is exchange and value, right? Secondary function is when you take a loan, so you have a deferred, standard or deferred payment can happen. There can be a store of value. That means you can actually have the value for the future also. You don't need to immediately spend it. You can store it and have that in your hands even in the future. And finally, transfer of value. So tomorrow if I want to give this money to someone, give it in, not in exchange, but just use this money for somebody else's payments or whatever the case is, I can do it because there is transfer of value. So if I put the money into somebody else's account also, they will have that much of an increase in their account value. Finally, what are the functions of money? The last one is contingent. What is contingent is basically it is useful for the measurement of national income. It acts as a basis of credit, because if you have money you can also get credit, right? You can get loans. Finally, it imparts liquidity to wealth, because if you are having some house you can actually liquefy it in the format of money. And estimation of macroeconomic variables, we have learned them, like national income, like any other format, gross domestic product, per capita income of a particular country, and so on. So all this estimation of macro variables can be done with the help of money, because it is a common denomination, it is a measure of value. Now coming to the concept of black money, which is a big challenge to especially the developing economies, where this black money eats up the various resources which are available in the economy. It creates problems for the economy, because there is a parallel economy running because of this money generated. So what is this black money basically, and why is it creating problems for the economy? Let us understand this. Black money basically is unaccounted money. That means you don't disclose this as the money in format of, if you're paying taxes or if you're showing your income, your wealth, you don't disclose it. You have it, but you don't disclose it. Then here the most important factor why it is not disclosed is because you avoid the payment of taxes. So if you're not paying the tax, you have a cash in hand of if you have a cash in hand of 10 lakh rupees, but you have not paid a tax on it, so naturally you cannot disclose it in as your wealth, and this becomes your black money. It could be also earned through illegal means, like suppose extortion, kidnapping, murder, any kind of terrorist activity. So people who are indulging in those type of activities may also get money paid to them, but obviously they are not going to disclose this as income, and so it becomes the black money. Black money means undisclosed money. And obviously if a person is having any kind of black money sources, what happens? Further illegal activities are also encouraged. So he will also pay somebody else in black money, that person also pays somebody else in format of cash, in format of black money, and so this keeps running around the economy. And there are goods, there are services which are exchanged against all this money, but the government gets nothing in the format of taxes. The country's income is not counted, because this black money is circulating, but it is not accounted for and it's not known, right? So it creates problems in economic analysis, in economic development, in infrastructure planning, because the taxes are paid less, and so on. And that's why it finally leads to what we call as economic, political, and social instability, right? It creates issues in the economy, in the running of that economy. You cannot have development created because you have lower amount of taxes. You cannot really find infrastructure development. You cannot find that the economy becomes stable. The parameters on the basis of which the economy is running may not be clearly accounted for, right? So this is what we understand as the concept of black money. So based upon all this discussion that we have done about money, now hope this particular chapter 2, which we spoke about on money, is clear to you how money evolved and how money is important, what are the concepts that can actually define money, and what is black money. So now we will meet in the next third chapter, which is talking about the measurability of certain economic factors with the help of what we call as partition values, an important statistical concept in economics which you should know, without which you cannot actually analyze the data easily, which is given in the format of economic data. So see you in the next chapter, chapter 3, which is partition values.